Jack Bouroudjian, we sometimes forget Wall Street traders. You're real people. How much of this sell-off today is just because your feelings are hurt by Senator Chris Dodd and all those new caps on compensation?
I think you're right on. I think a lot of it is what's happening out of Washington. There is a lack of confidence here. Remember, we keep trying different things, and I think it was Rick Santelli who was talking about it earlier. He said what they're missing, though, is that magic dust that brings confidence into the marketplace. And right now we're not getting it. Where there was no meat on the bones with that banking bill. I think the entire street was disappointed by that. The stimulus bill looks like it's nothing more than 8 years of Democratic frustration coming out. So all of that is really starting to play in. Now, the one thing that I'll say to what Vince said is that I agree with him. I think we can get down to that 10 or 12 multiple. The only problem is, what are earnings? Remember, that is working if it's a $60 earnings projection, but we had Goldman Sachs come out 2 weeks ago and start projecting $53. So all of a sudden,
how big of a blow up? I want to go to you on the confidence games question, because you have the Stanford financial news on top of everything else that's out there. How much talk is being given to the fact that we can't even be confident in the institutions that are supposed to be providing us stability in this time?
That's an issue, Rebecca, but Jack's point and Vince's point is really the main focus, and that is the earnings situation. So what's happening now, Jack, is that they're in the process of taking down earnings expectations for the second half of the year. You know, they back-ended the expectations for retailers and for financial stocks. Now they're starting to realize those numbers are not going to be made, and that's why the market is starting to move lower. Whether it's because the stimulus isn't going to work as much doesn't matter. The bottom line is earnings expectations are coming down. But Jack and Vince, that's what's going to create a bottom. Yes, we're going to break the old lows. We're already there, essentially. Let's not worry about that. The question is, what is the right number? And Vince, I got news for you. They don't know whether it should be 10 times forward earnings or 13 times forward earnings. You answer that question, and you can go a long way towards figuring out what the PE ratio is.
Bob, I don't know anything, but I know in the history that when inflation's below 2%, the multiple is averaged 18.5 times. And that's only valid if you think earnings next year will be up. Now, even the bears like Rosenberg and the relatively bearish Goldman Sachs have up earnings for next year. So I feel that you ought to put a very high multiple on whatever earnings ought to be this year because inflation's so low. Like I say, throw that out if earnings go down next year. Then you have a 10 or 12 multiple, which is your deflation scenario. But I don't think that's going to happen. I think earnings will go up next year.
Rick, timing is everything. Last week is when the Treasury auctioned off all the 10s and the 30s. They should have done it this week after the free fall we've seen in rates today so far, huh?
Well, they'll do it again, Bill. They're going to be auctioning our treasuries for as long as we draw breath.
Remember that there's plenty of supply coming on the market over the course of the next year.
So I've heard.
But notice interest rates are down today, okay? Yeah. You know, conventional wisdom is a dangerous tool in the toolbox.
Rick Santelli, I want to go back to Dennis's point about when it comes to executive compensation. I mean, Christopher Dodd's amendment that he snuck in there at the last minute essentially used to be, they've gone from executives to people who actually generate revenue for these companies, the producers. And if they say you're going to go after the top 25 income earners, they're going to flatten the entire pay structure. Think about executing it. Okay, you're the top 25. Now you're not. Now you're the next 25. I mean, it's going to be a mess. I think this is definitely hurting a lot of the bank stocks.
It's not going to be a mess. It has been a mess. It is a mess. And I don't see that the mess is going to be altered moving forward. At the end of the day, government shouldn't run banks. The unintended consequences of tax dollars being monitored so they don't go to bonuses causes a certain form of intrusion that the government is ill-equipped to have their presence in that equation. It's just going to get worse in that regard.
All right. Must go at this point. Gentlemen, thank you all.
Okay.
Bob Monroe is excused. We'll see you all later.